Most people think saving $10,000 is a big milestone. But here's what they don't tell you. The real magic, it happens when you invest that $10,000. I've been teaching everyday people how to invest for years. And I've seen this transformation happen over and over again. When someone moves from saving their first 10,000 to investing it, everything changes. Their confidence, their opportunities, and most importantly, their wealth. On this episode, I'm going to show you exactly why investing your first $10,000 is the most important financial decision you'll ever make, and how it separates those who stay broke from those who build wealth through the stock market. All right, so first, let's have a savings reality check. Okay, saving is important, y'all. I'm not going to say saving isn't a big deal, but it's just the beginning. And let me tell you why. Saving, it's for safety. Saving doesn't help you build wealth. So for instance, if you have a savings account through your local commercial bank, they may pay you 0.05% interest on that savings account. So if you have $10,000 in that account, even if it's 0.5%, that's going to pay you $50 a year. Your money's not working hard enough that way. Here's the other part of this that you got to keep in mind. See, inflation every single year averages about 3%. So that same $10,000, because of 3% inflation, that $10,000 would need to be $10,300 in the following year to buy the same amount. Another way you can look at it is that your $10,000 loses $300 in spending power. So $10,000 this year is actually worth $9,700 next year. So when you look at the math between what you get on an everyday savings account and what inflation is costing you hustling backwards. And this is why you have to invest in the stock market, because this is how your money goes to work for you. So if we use the same $10,000 example, if we just invested that into an S&P 500 index fund, y'all hear me talk a lot about VOO. VOO has averaged 8 to 10% for the last 100 years. That means that in a year, your $10,000 will make $800 to $1,000 a year. That's growth. That's more than what you would get on a savings account, and that's more than inflation. As a matter of fact, it's 3 times what we see in a year in inflation. I saw this post on Instagram, and let me read it to you. It said, once your portfolio hits $100,000, money stops being a tool you feed and it becomes a machine that feeds you. We really want to get our portfolio to over $100,000. And that first $10,000 is a huge leap to getting there. There's a book that I really, really like, From Good to Great. And in that book, he talks about getting your economic engine going. And it's kind of like pushing a flywheel. Anytime you're just trying to get momentum started, think about if a car has stopped and you need to push it to the side of the road. When you first start pushing, it's almost like this car is never going to move. And even me and my friend aren't strong enough together to get this car to move. But once that wheel starts moving a little bit, that next rotation becomes a little bit easier. And then that next rotation becomes a little bit easier. And before you know it, the car is rolling as if someone was actually pressing the gas on the inside. That's the same thing about getting to your first $100,000. That first 10,000 is like that initial push that feels like the car isn't gonna move. But once you get there, the rotations get easier and easier. You have a great job. You're making really, really good money, but you know that money is not working for you the way that it should be. You're not by yourself. I meet so many professionals. They're killing it professionally, but they know that they are not using their money to create the lifestyle that they want. Look, most people, They struggle with investing. They either just don't know where to start or they're so afraid of making the wrong decision. And that's why I created the 5 week investing challenge. Like it gives you education, pre-recorded videos that you can watch whenever you like. So it fits into your schedule no matter how busy life gets. 5 weeks from now, you could be still trying to figure out what to do with your money, or you could be watching your investments grow. Your future self gonna thank you for the decision that you're about to make today. Go on, click the button. I'll see you in class. And here's another thing about managing a portfolio that's less than $10,000. There's a perceived limitation that the size of your portfolio limits the type of investments that you can have, right? So if you think about having a portfolio that's just $1,000, well, there are stocks that I really like that I've told you guys about that are $1,000. Or if you think about a stock like Meta that's over $600, right? If you have $1,000 portfolio, there's this perceived idea. It's not real, but there's a perception of I can't afford Meta stock. And this is not considering the fact that you can actually purchase fractional shares, and those fractional shares do move in the same proportion of the underlying stock. But just people just mentally, when they see the numbers, like I have $1,000, the stock is $600, they're just like, this doesn't work, right? Or when they think about investing in VOO, VOO is $600, okay? And you may have this idea that because your account is below a certain amount, you can't afford a stock. The same way that we perceive affordability of electronics or anything else that we use on a daily basis. We shouldn't look at the stock market the same way, but I know for a fact, look, I talk to people every single day, and I see how the price tag on a stock can be a barrier to people getting invested. But once you hit $10,000, there's not a stock that you can't afford unless you're thinking about like Berkshire Hathaway, right? Most of 99% of the stocks on the market, you can afford to buy a full share when your portfolio hits $10,000. So naturally, as an investor, it boosts your confidence. Your chest sticks out a little bit more, and you know that you can own the best stocks on the market without just owning a piece of it. Look, another reason why $10,000 is a huge milestone is because market dips can really be viewed as opportunities. Now, y'all know one of my favorite things, one of the strategies that I use the most is buying stocks at discounts. This can be challenging when you don't have extra cash on the side in your brokerage account. Okay, it could be that you don't have extra money to put in a brokerage account to buy the dip. Number one, but then number two, when you have less money, you're more concerned about losing it. Okay, you're like, hey, I'm only starting off with $100. Seeing a $10 drop can give you a little bit of trauma. All right, you're gonna be like, yo, I know I'm just getting started, but like we going the wrong direction. Okay, and I get that. When you have a little bit more cushion, you have less emotional responses to the volatility, right? To the stocks moving in the opposite direction. Another big thing is when the market dips, when you have additional cash in your investment account, you can actually buy the dip. So the volatility isn't a threat to your portfolio, it's an opportunity for you to buy more. You can buy more during dips when you have more money. So this is just another motivation as to why we have to get that account up to around $10,000. Small investors fear volatility. Large investors welcome it. And compound interest becomes your best friend around $10,000. Let me tell you why. You see your money grow exponentially. After 10 years, a $10,000 investment is worth $21,000. After 20 years, it's 46,000. If you hold on to it for 30 years, a meager $10,000 investment just invested in something like VOO will be worth over $100,000. The interest goes to work for you. If you take a deep look at the numbers, you'll see that your money is growing even more every 10 years. That's the power of compounding. That's the reason why we want to invest and keep our money there. Everyday people who don't have trust funds, who didn't inherit a lot of money, this is how they build real wealth. Once you hit this milestone, you'll also stop obsessing over daily moves and you can be cool and you can just wait for your money to grow. See, when you first get started, there's this tendency when you have a little bits amount of money invested to check your account every day and look at different market moves and have an emotional response. But see, when your account really grows, you're able to focus on the longer term versus the obsession over the daily moves. I believe everyday investors should check their portfolios once a month. It's much easier for you to be at peace month to month when you have a larger balance in your account. There's an identity shift that takes place. You go from being a beginner trader with anxiety to becoming a real patient investor. Once you make this psychological shift, this separates the wealth builders from the money worriers. And we're not worrying about money, y'all. Now, this last point, if you know me, I'm not a big dividend guy. I don't look for dividend stocks or any other types of investments. All right. I'm a growth investor. However, once you start having larger amounts of money to invest, dividend income does become more significant. So even if you think about at $10,000 and a 3% dividend, that's an extra $300 a year that you didn't have to do anything for. That $300 could be groceries, that could be a car payment, that could supplement your income in a number of different ways. But what I would really advise you to do with that dividend payment, if you were to take that extra $300 and reinvest it. So now you don't have $10,000 that's working for you. You have $10,300 that's working for you. So here are your get started action tips to help accelerate you to your first $10,000 in the market. Number one, don't wait on perfect timing. You're not going to time the perfect dip. You're not going to know when the perfect time to buy is. So you need to be consistent. Invest an amount that you can afford every single month. When you make extra money, add that extra money into your portfolio. Don't find extra things to buy. Number two, start simple. Don't take unnecessary risk when you're first getting started. Start with an ETF. I like VOO. Some of the more aggressive ETFs I like are VOOG or even SMH. Don't panic if you don't have 10K yet. Invest what you have, 200 a month, 500 a month. It adds up faster than you think. And you want that to be invested automatically. Guys, these are some of the principles that I teach in my beginners investing class. Every Thursday and Sunday, I help beginners with the information they need to start investing in a responsible way. The link to register for my free class is in the channel description. Make sure you register and I can share with you other things that you need to be doing as a beginner investor. All right, guys, look, remember, saving 10K is good. It shows discipline. But investing 10K is what builds real wealth. I'll see y'all on Sunday or Thursday. Peace.